Good morning. Morning. On behalf of my fellow panelists, our Group Managing Director, Mr. Patrick Hilton, allow me to welcome representatives of the media, analysts, investors, and shareholders joining via the web streaming, fellow NCB colleagues, ladies and gentlemen. I'm Dennis Cohen, Group Finance and Deputy Managing Director, and I will be presenting on our financial performance for the year ended September 30, 2015, and also on our corporate activities during this period. We are pleased to report another commendable financial year. Within the context of our challenging operating environment, these results demonstrate the resilience of our business model and the benefits accruing from our 5-in-5 strategic initiatives. Our major business lines have enjoyed healthy year-over-year growth, resulting in increased revenues, consistent net profit performance, robust capital ratios, and attractive and consistent dividend payments. That said, I note that our Board of Directors at its meeting yesterday declared an interim dividend of 85 cents per ordinary stock unit, payable on December 11 to stockholders on record as at November 27. We report net profit of $12.3 billion for the 2015 financial year, as reflected in the bar chart on our screen. This represents a marginal year-over-year decline of $25 million, or 1/5 of 1% from the prior financial year. However, because of a commendable growth in our total assets and stockholders' equity of 5% and 8% respectively, our return on average assets was down from 2.6 to 2.4%, while our return on average equity was 14.5, down from 16% in the prior year. Also of note, our cost-to-income ratio is marginally up to 62.3% from 62.2%, while our operating income has increased by 10% to $47.5 billion. In comparing the 2015 and 2014 numbers, the following points should be noted. There was an increase in irrecoverable GCT and asset tax to the tune of $1.1 billion. Also of note, in 2014, there were revenues totaling $1.1 billion, arising from negative goodwill, disposal on our associate company, Kingston Wharves, and also share of associate profits, which did not reoccur in 2015. So in spite of these material items adversely affecting our 2015 numbers in comparison to 2014, it's good to see that our net profit was down by only $25 million from the prior year. Why was that so? This is because there was a 15% growth in our 2015 operating profits, which was $16 billion versus $13.9 billion in the prior year, as illustrated in the chart on your screen. Also of note, our 2015 operating profits was the highest in the history of the organization and underscores the resilience of our business model and continued improvement in our core operations. The next slide is our net profit bridge, showing the major variances in our year-over-year net profit performance. The major revenue variances were net interest income, gains on foreign exchange and investment activities, and net fees and commission income. While other operating expenses was up $2.2 billion, primarily as a result of asset tax, GCT, and marketing expenses. We will examine these items in more detail on the next slides, which explore greater detail in our revenues and expense activities. Our next slide shows that we had improvements in all our core operating income lines, which resulted in our operating revenues increasing by 10%, or $4.2 billion. Of note, I bring to your attention that our net interest income was up 5%, or $1.3 billion. Loan income was primarily responsible for this increase, with loan income increasing by 6%, or $1.2 billion, primarily due to volume growth in our loans portfolio. Also of note, income from securities was down 3% due to lower yields, while our interest expenses were down $717 million as a result of low funding cost. Gains on foreign exchange and investment activities was up $1.2 billion, or 45%, resulting primarily from increased market activities and also the valuation of our local currency. Net fees and commission income up 13%, $1.1 billion, driven primarily by higher card usage and increased volumes in our point-of-sale e-channels, unit trust, and corporate finance transaction fees. Also of note, $644 million increase in life and annuity contract premiums as a result of a 25% increase in life and annuity contracts and a 3% increase in general insurance contracts. Now looking at our operating expenses and just noting the major changes. Other operating expenses up 25%, $2.5 billion, as I mentioned earlier, primarily as a result of an increase in asset tax and irrecoverable GCT, both accounting for $1.1 billion. An increase in our tax charge of $900 million year over year, a major contributor being a change in the tax regime for life insurance companies, and also our depreciation expenses of $316 million, or 25%, primarily as a result of the implementation of a number of our initiatives, and in particular, the Bank on the Go. Now looking briefly at our segment performance. This slide displays the year-over-year operating profit for our business segments. Of note, Treasury and Correspondent Banking continues to be the largest contributor to operating profit, with 27%, and our Wealth, Asset Management, and Investment Banking segment was second, contributing 20%. Contributions range from 7 to 27% for our 7 business segments, demonstrating the diversity of our income flows. I bring your attention quickly to our corporate banking division, which contributed $1.4 billion, or 8%, and representing a 153% increase over the prior year due to higher net interest income and fees and commissions related primarily to their loan portfolio. I mentioned earlier Treasury and Correspondent Banking contributing 27%. They had a year-over-year increase of $1 billion, or 26%, primarily driven by foreign exchange and trading activities. A review of our key balance sheet items and their growth year over year shows that our 2 major asset categories, loans and investment securities, now stand at $165 and $270 billion respectively, and together account for 85% of total assets. Customer deposits have consistently increased each quarter and was $228 million. Repurchase agreements were $100 billion, reflecting a decline due to the transfer of our retail clients to our unit trust products. Our unit trust portfolio was at $23 billion at the end of the financial year, representing a 174% increase year over year. And of note, our US dollar funds has been doing well and now stands at US $77 million. Our total assets and equity were $524 and $88 billion respectively, and are both the highest in the industry. Now, taking a look at our capital, all our capital for respective entities are above the regulator benchmarks. In particular, NCB Capital Markets and NCB Insurance, which are at 35.3 and 47.5% respectively, well above the regulator requirement of 10%. Ladies and gentlemen, this is the end of my report on the financial performance, and I will now share with you highlights from our corporate social activities during the period under review. For the financial year, we set out to advance our position as the premier financial institution in the English and Spanish-speaking Caribbean. And to this end, we have been pursuing a mix of organic and inorganic initiatives in keeping with our 5-year strategic plan. Our 5 main pillars include sales and service effectiveness, lending expansion, payments innovation, efficiency optimization, and local and regional expansion. Our primary focus remains the transformation of our business model to enable us to adapt to our rapidly changing environment. With that in mind, we recently appointed Nadine Matthews to the role of Chief Digital Officer. Where she will drive the digital transformation across the NCB group of companies. This, ladies and gentlemen, demonstrates our continued commitment to transforming our operations and to ensure we maintain our position as a market leader and a regional contender. As we look to further drive the profitability of our business, we will highlight some of the initiatives taken during the period under review. In keeping with our mandate towards local and regional expansion, we continue to explore organic and inorganic growth strategies aligned with our strategic focus. Accordingly, we have done the following: the acquisition of Advantage General Insurance Company Limited and NCB Global Finance Limited in Trinidad, as well as the rebranding and repositioning of our Cayman operations as a regional wealth management hub and booking center. During the year under review, we incorporated NCB Capital Markets Barbados Limited. This entity obtained a securities dealer's license from the Barbados Financial Services Commission in September 2015 and will serve as our investment banking hub for the Eastern Caribbean under the leadership of Warwick Ward, who has been appointed CEO. On August 31, 2015, we opened our Banking and Financial Services Center, a 2-story, ultra-modern, 20,700 square feet office located at 124 to 126 Content Spring Road. As a one-stop financial services center, this office provides a unique opportunity to offer our full suite of products and services in one convenient location. Our customers will be exposed to greater value-added service options while they are served in a more expansive and relaxed atmosphere and served by 73 of our team members. We are also pleased to have recognized the work of our SMEs through the staging of our 8th Nation Builder Awards. In October, we acknowledged 11 outstanding SMEs in the categories of innovation, young entrepreneurs, and nation builder. Trial Beach and Country Club emerged as a nation builder for 2015. Please join me in congratulating them, as well as one-on-one education services who received the Young Entrepreneur Awards, and Knutsford Express, who walked away with the Innovation Award. Our support through our foundation towards nation-building activities saw us sponsoring several initiatives focused primarily on education, youth leadership, entrepreneurship, community, and sports development. The most notable commitment for this quarter was towards our flagship scholarship and grants program, where we assisted over 350 students from primary to tertiary levels. In closing, I invite you to turn your attention to the screen for further highlights, after which our Group Managing Director, Mr. Patrick Hilton, will share his perspectives on the way forward. Ladies and gentlemen, thank you.
There is no quit, no quit, no quit. There's a voice in the head of a champion singing, go for it, for it, for it. It's the beat of the heart, it's the call of the soul. It's ignoring the pain while you're striving for gold. You're a winner, a winner you are. You're a winner, a winner by far. In the little community, someone is rising before the sun. While the world is asleep, they're doing that crazy morning run.
All right, ladies and gentlemen, good morning. That was a very comprehensive presentation by Mr. Cohen. So comprehensive that I think it covered most of mine. or what I plan to say in terms of perspective. I want to maintain our cost-income ratio. But it certainly covered a lot of what I had to say in terms of my own perspective and the way forward. Having said that, let me just welcome those streaming live on the World Wide Web, just to acknowledge them. I want to also acknowledge members of the media, the investor community, analysts, and so on who are here to help us to articulate and to carry our story. Of course, always a welcome to my colleagues, a special welcome to my colleagues from NCB. I want to begin, ladies and gentlemen, by giving thanks. Thanks to our customers, thanks to our staff, thanks to all who have participated in making this journey the success that it has been so far. It is a collective effort. There is no single individual or someone who is responsible for what we are witnessing. I think that Dennis made a point earlier that even though the results on the face of it in terms of the net profit after tax is flat, when one takes into consideration the two items, one, the exceptional revenues that we experienced last year, arising from both the negative goodwill on the purchase of NCB Global Finance, as well as the exceptional gain on the sale of the shares in Kingston Wars. And then when one looks at the significant increase in asset taxes generally, that we have had to bear this year, it is indeed a commendable performance. In terms of the strategy going forward, Dennis made a point that there are essentially 5 strategic themes or 5 strategic pillars which we are organized around as a business, right? And he mentioned each of them sales and service effectiveness, which is really focused on improving sales productivity within and across the entire NCB group of companies, while at the same time improving the customer service, the quality of the customer service, the customer experience within the organization. And there's another element to it, which is really about increasing in relative terms the proportion of our organization that is engaged in creating new business, right? So we drive the value added component. We also spoke about lending expansion, which is really about, and a big part of the focus in this is the SMEs, in terms of better understanding their financing needs and seeing how we can bridge the gap that currently exists between us and them in terms of facilitating those needs, or even in helping to create financing solutions that might not involve us directly. And one of the things we have also been very focused on doing, where they are concerned, of course, is capacity building, right? By engaging in training programs and various other initiatives, including things like the mobile clinic, mobile business clinic, to help them to build their capacity to meet the requirements, the hurdles, to have access to the formal financial system in terms of financing. And of course, we speak about efficiency optimization, which is really focused primarily around lean principles, which is really about reducing the cost to serve while at the same time improving the quality of the service. That's the challenge. The challenge is really about more with less. Yeah? And of course, we spoke about regional expansion. We have made a number of strides where that is concerned, and they were all mentioned. And of course, my friend Bob is innovating in the payment space, right? With new products, new services, new ways of doing things. And there's more to come as we start to embrace and engage in mobile financing activities as soon as the framework is in place to facilitate that. The other point, which I think is important, is that we're adding a sixth pillar, a sixth component, which is around digitization. And as Dennis mentioned earlier, Nadine has been tasked with those responsibilities. And you'll hear more about that throughout the coming year. At the last check, we were about 7 in the region in terms of our 5 in 5 aspiration. We still have a year to go, and we are still expecting that we will get there. And during the course of the year, we will be developing the new aspiration, which will take us forward. That is beyond the end of this new financial year. And as soon as we have agreed on that and we have defined the framework within which we are going to achieve it, we will, as we had done previously, share it with you, our stakeholders, so you can be aware of our thinking and where we see ourselves going as an organization. In that regard, recognizing that Nadine would have been overburdened with digitization, we have transferred responsibility for strategy to Janelle Prevost, who I don't know if most of you know, but she's sitting here with us today. Another bright young lady in the NCB sphere. Ladies and gentlemen, as I talk about the future a little bit, there are two things top of my mind. I mean, there are a number of, we're operating in a time of rapid change. I mean, people talk about the pace of change accelerating. I don't think there is any time change has accelerated faster than it is today. And there are two developments in the Jamaican environment which I think are of particular relevance to us as an organization. One is the reduction in margins that we have been experiencing as an industry. Everybody will have witnessed the reduction in interest rates on loans right across every sector. Business, corporate, SME, personal, right? Car loans are at their lowest in terms of rates in a long, long time, I'm sure, if not ever, right? And we're witnessing that. At the same time, in terms of investment securities, we have also seen a significant decline. And what that means is that our net interest income is more challenged. our cost-income ratio is more challenged in terms of maintaining, a respectable performance where that is concerned. And so this is the reason why we're doing some of the things we're doing in terms of innovating, right? So as to be more effective and more efficient, so as to see how we can, as an organization, can get more with less. And then, at the same time, we see where legislation has been put in place and is being promulgated to facilitate agency banking, which means that the advantage which many institutions enjoyed just by virtue of having a wide presence across the country is not such a great advantage anymore because it can be more easily replicated by others who can enter into new arrangements very quickly with others to facilitate those services that will be permitted at those locations. And in fact, in doing so, they will not be somewhat constrained by an older type of physical infrastructure. In other words, they can use technology more, they can be more efficient and effective from the start. So those are some of the challenges. And then, of course, when we look at the global environment, we see where financial services is undergoing rapid transformation. We see where in the payment space, all kinds of new initiatives, all kinds of new players, many of them non-traditional financial institutions have entered the fray in a major way. I talk about things like Apple Pay, various initiatives that are taking place. We see the impact of PayPal. And then we also see within that space new initiatives around things like financing by non-traditional financing firms and by groups, communities of people coming together to facilitate their own financing needs. We are not immune to those as an organization. We're not immune to those as a country. And our expectation is that over time, those will start to have a more significant impact in our environment, whether here in Jamaica or as we expand as an organization. And so we are preparing for that. We are very confident and bullish about the future. We believe that our plans are robust. We believe that we have the right set of initiatives, the right focus to take us continue on our northern trajectory, to sustain us over a long period of time. We are also pleased with what we have seen in terms of the macro performance and improvements that have been experienced. We don't have to go into great detail here. Everybody will see the results of the various IMF tests and the various improvements in the macroeconomic indicators and so on. So having regard to all of those things, we are of the view that, in spite of the fact that Jamaica is not totally out of the woods, significant progress has been made, that we're on a good path, and that as an organization, we're in a good place, and we have the right focus and the right set of initiatives to take us forward on a sustainable basis. So our outlook is very positive, and our expectation is that we will continue on the trajectory that you have seen historically. I think that more or less covers what I have to say this morning. And having regard to that, we will probably just open up the floor for questions. Yeah?
Morning. Again.
Morning.
In my capacity as a journalist, I have a question. I'm also a shareholder, but I'm asking this question as a journalist communicator. And a social media convert. I tweeted the fact that you mentioned the $16 billion in operating profit. And perception is a funny thing. The responses typified by this one were negative. People are saying if they could just share some with the people whose money they're using. So Dennis, I'm asking you to put that into context so that the average person out there who sees this kind of information, can see that context. Because I see that your operating expenses increased by over $2 billion too, right? But for the average person, explain it, both yourself and Mr. Hilton. I'd like you to communicate that to the average Jamaican who is going to see this kind of news out there. Thank you.
I think the important context to note is that that figure represents, I think, only a 14.5% return on equity. Right? As a matter of fact, the point has been noted that there are declining spreads in the environment. There's a fall year over year from 16 to 14.5%. In this industry, we've seen return on equity being as high as in excess of 20% in the past. I think we also need to look at the return on equity in the context of the overarching sovereign risk that operating in a country like ours represents. There are a number of institutions operating in environments which are better rated, certainly by the rating agencies, who are actually experiencing a better return on equity than we are experiencing here in Jamaica. So I think invariably what happens is that the context is lost because we're actually comparing only with what's happening within our environment and not taking into consideration the broader global perspective. We can't be limited by that because we have aspirations to being a regional institution, right? We consistently compare ourselves to our peers across the region, and our performance is commendable. It is not outstanding. Certainly not when we look at our numbers. I mean, an institution, for example, like Republic Bank in Trinidad, probably makes close to twice the net profit of NCB. And they're operating in an environment where the population is almost a third of Jamaica's population. And I think oftentimes people lose that context. I think we probably need to do a little bit more research and not get caught up in the absolute numbers and just comparing ourselves with the persons within our operating environment. And I think if we continue to do that, it's going to limit our ability to grow as a country. I also think we have an issue to the extent that we tend not to celebrate success. And I think, I don't know if it's cultural, but I think there's a tendency for persons to undermine any form of success rather than, try to emulate and try to replicate. And I think it's something, that's a challenge that we face. And we make no excuses for doing well, and we will continue to do well, or we'll continue to do our best to do well going forward.
So you wanted me to add anything to that? I can add a little bit. I can add a little since you asked. I mean, I thought it was comprehensive, but I can.
You notice the caveat to my question was for the average Jamaican.
Yes.
Because perception is a major issue in this country.
No,
I'm
yes, with
Dennis,
you.
I do agree with you. Very few celebrate success. But as a strong proponent of that, I've seen my own reward on it, celebration of success. But Mr. Hilton, the issue of the operating profit and the record operating numbers, put it into context so that the average Jamaican understand. Expand on what your deputy managing director said about it. Because perception in this country, people view it as even better than reality.
And also note is record operating profits, not record net profits. Make a note of that.
Let me just make a comment, or two comments really, because I thought that Dennis made the major points. One thing, there's a context that we also need to see. This is a $524 billion organization, right? So when you look at total assets of $524 billion and a net profit of $12.3 billion, right? It's not as impressive as it may seem on the face of it. So the number 12.3 or 16 billion looks large and looms large, but when you put it within that context, I am saying it is not disproportionately large, right? I make that point. The second point I want to make in support of an earlier point that Dennis made is that, it is important that especially in this environment, that some of us do well. For a number of reasons. One is that it demonstrates that you can do well, right, in spite of the challenges and the environment and so on. So role modelship is an important aspect of not only individual performance, but organizational performance. That is what will inspire people. Because it's when we recognize that it is possible to do well, that many others get motivated to do well. And there are others who are doing well. Maybe some of them are not as public as we are, right? But they are doing well. And our performance demonstrates that it is possible. The other thing which is also important is that for us to play our role, and given the type of role we have been playing in terms of corporate social responsibility, requires that we do well. We have said many times that those who can should, and we recognize based on our performance that we can, and because of that we have been doing, right? So I'm saying that in addition to the other points that have been made, the fact of the matter is that it is important for us to be successful. We have seen the history of this organization, the impact of it not being successful. And that's not something we would want to ever experience again, right? So it is important that we do well. There are other reasons why it's important that we do well. As a financial institution which is interconnected with the global environment, institutions abroad which provide us with lines of credit, which enter into correspondent relationships and so on, are looking at our performance as a basis for indicating whether or not they want to do business with us. And doing well, matching up to global standards in terms of performance, is an important benchmark for them. Right? So I could go on all morning telling you reasons why it is important that we do well. And so we stay focused on that, right, in terms of making sure that we execute. Requires a lot of planning, requires a lot of skill and so on, given some of the challenges. But we are committed to doing that because we think it is much better that we do well than we don't.
All right, good morning. My two questions are for you, Mr. Hilton. Right, so in addressing the change in profit and stating that profit basically remained flat year over year, two main points you cited were the sale of the holdings in Kingston Wharves and the decline in margins, the interest rate spread. So the two questions have to do with: one, how were the proceeds from the sale of KW redeployed? And the second question is with regards to the interest rate spread. It's interesting that the average lending rates, or the spread between average lending rates and the deposit rates, are a little changed. Why is that the case? And just to add on to what you just said with regards to corporate social responsibility, saying those who can should, are you comfortable as an organization with the spread between your lending rates and your deposit rates? And do you think you could do more for the customer? Thank you.
So I'm going to let Dennis set the first two, and I'll take the. Yeah?
Okay.
About redeployment and.
Yeah, the proceeds from the sale of Kingston Wharves would have actually gone back into our normal general business operations. So that would have gone to fund loans. The proceeds might have been mixed up in investing in government securities and all of that. So it's not, we didn't collect that cash and specifically earmark it to a particular item. It becomes a part of the general capital and the general funding base for the organization. Interest rate spreads. It is a fact that interest rates are down, right? And the rates that we're quoting to our customers are down from where they were a few months ago and last year. It's difficult to get into a discussion of what you may look as the margins on a balance sheet, right? Because that's a combination of various things, and the weighting and mix of the various assets will complicate and make it difficult for you to draw any assumptions, right? So I'd warn you against that when you make reference to what I assume you're saying what you're looking at is the margin on the balance sheet remaining the same. Our growth in net interest income is driven primarily by the increase in volumes of our loan portfolio, which invariably have a higher return than the return we get from securities, right? That mix being weighted more in favor of loans helps the overall weighted average return on the assets, right? You need to get into a lot more details in order to separate, but the fact is that the rates are down. You go in, look at the rates quoted, people are quoting below 9% now. That has not happened in my history in banking, right? 9%. Well, the fact is that secured was in the teens not too long ago. So whether secured or unsecured, you take any comparable measurement and look at that specific rate over the past year or two, and you'd see a substantial decline. Single digits borrowing was not even open to the best of our corporate entities a few years ago. Right? So I think that's a fact, and I think we just need to be very careful of trying to get into assume too many things by looking at the overall mix of interest income, interest expense, which comes out in the P&L, because it's not for that purpose. Right? So that's a comment I'd make.
Sorry, the spread I was referring to really is the spread between average lending rate and the deposit rates if you have the clients who save and invest for next.
And I think that's the point he's making, that you can't just look at that because we fund loans with securitization proceeds. There are several other things that are used to fund loans. And at the end of the day, the marginal cost of borrowing is what is going to be the major determinant. So there's a funding at the margin. There's a historical context which exists and which will mature, and so over time. There is a current context which is different. And as I made a point, you can't just compare deposits and loans, because it's not only deposits that fund loans. And that's the point. Yeah? The loans are funded from several sources.
Right, but you also mentioned earlier the lower cost of funds. So all of that was direct to one picture that you really expect to see, not just lower rates.
But that's what you're seeing. You're seeing lower rates.
Yeah, I'm saying you shouldn't just see lower rates. You should also see that spread narrowing significantly.
Yeah, and then, well, it goes back to the same point. At any point in time, one would need to take a look, for example, at the mix of our current accounts and SIMS accounts and all of that, right? What happens, for example, with interest rates that low, the incentive to move money from balances from our current accounts, people don't even have that interest in terms of managing those things. But we come back to the same point, though, is that to draw conclusions there requires far more data. It requires far more details in the portfolio. But what I'm saying, though, is that it is a fact that the rates have come down. Right, to the extent to which an organization, for example, in the context of low interest rates, have been able to structure their interest rates management such that they're able to widen their spreads, whether by the structure of their interest rate portfolio, whether by locking in longer term assets when they recognize that rates are heading down, whether locking in securities for longer term. Those are other issues which come into the mix. But I'm saying you have to focus on the facts. That detail that you're referring to, I think you can't come to that conclusion by looking at a complex mix of assets and liabilities. There are some other questions.
Good morning. Two-part question. First part, talking about regional expansion, and Dennis mentioned celebrating success. Next year will make about 15 years since NCB rebooted. If you look at the landscape in that particular time, you've surpassed First Caribbean, Scotiabank, you talked about Republic Bank. Can you elaborate about your plans to expand in the region? Would you list across the Caribbean, and how do you plan to go forward with that? Second part, in February, we expected to have a lot of liquidity, something in the region of $67 billion. What are your plans? It's going to be a bit of a salmon season. What are your plans of that? How do you see that, and what do you want to do with that?
You know, in terms of regional expansion, I think Dennis had mentioned that, and we have said it, we have an aspiration to be a regional player, right? To be a leading regional player, quite frankly. And about 4 years ago, we clearly articulated that aspiration in terms of where we wanted to position ourselves. Primarily focus on financial performance, because the truth is that, in a sense, our ability to expand in terms of our physical presence is going to be determined by the opportunity that exists to facilitate that. In most jurisdictions, no new licenses are being issued and so on, and so it has been done primarily through acquisition, right? Having said that, we have gone ahead. We have now established a presence in Trinidad. We have established a presence in Barbados, right? We had a presence in Cayman, which has been expanded in terms of the suite of services and the structure of the financial arrangements that we are primarily through NCB capital markets. And we have also been working on our presence in the Dominican Republic. Outside of that, there have been a number of occasions in which we have engaged in dialogue with a number of regional players around whether or not, you know, we can enter into some sort of arrangement, whether by way of acquisition or any other type of institutional arrangement which could increase our presence, right? But we look for what we think are opportunistic ways in which to do that. And that search continues. We actually have an area of the bank with persons who have responsibility to execute that function, because we believe that it deserves that level of attention and focus, and that's the only way we're going to get it done. And so my expectation is that the pace of regional expansion over the next few years is going to quicken, right? Particularly to the extent that opportunities present themselves. And we feel that in the current environment, there are likely to be more opportunities in the relatively near future. So we stay very focused on that. The second part of the question was, what was it?
Liquidity?
Liquidity. Yeah. Okay, so we know that, you know, I mean, what has been referred to all over as a major liquidity event will take place in February. I mean, it's part of the business that we do. To some extent, we are seeing where the market has started to price it in. And I think that is what is reflecting itself in terms of the rapid pace of interest rate reduction that you're seeing. We expect that some of that will continue. And so we have been adjusting our business model. We have been implementing elements of the strategy that Dennis mentioned earlier, such as trying to lock in some elements of funding, you know, where we think the price is inappropriate. We have been looking at, you know, new products and new initiatives. We have also been very focused on improving our efficiency as an organization, because our expectation is that margins will contract even further within that context. So, you know, we see it as another business event in the cycle of running a business of the nature that we're involved in, and I think we're adequately prepared for it.
Mr. Hilton, one of the things you mentioned is change, which is constant, as we know it, in media and banking and so on. What broad strategies is the NCB group contemplating to deal with smaller and more nimble players entering the deposit-taking market?
I mean, at the end of the day, you know, Owen, to my mind, if we can just look at, we don't have to reinvent the wheel. We can look around the globe, around the world, that large, you know, long-standing institutions have done to deal with the disruption caused by new entrants, nimble, as you mentioned, small, agile players. And the most successful strategy is not to wait to be disrupted, but it's to disrupt yourself. In other words, to constantly disrupt yourself by looking at the environment. In other words, is almost to behave in some respects as how these people behave in terms of their thinking and their attitude. It is the reason, for example, why we took the lead and took the initiative in introducing banking on the go. We went out there and we said, listen, this is a huge investment, it's a significant investment, but it is our view, having regard to the way in which things are evolving, right, that we need to transform the way in which we offer these types of services to our customers. So we went out there with a lot of technology, a lot of engagement was involved in getting machines that could accept the notes, that could count the notes, that could give you the denominations and so on. Because I didn't know that, for example, that each note was so different, right? And the level of testing and so on that would be involved and engaged in facilitating this. We have gone further, we have introduced kiosks where people can do more self-service. And then we have expanded the suite of services that we offer there, and now we are going even further because our plan is to make every location a 24/7 location, right? And then there are other initiatives which we have planned in terms of that. As I mentioned, in terms of payments, there are a number of things that Bob is working on, several initiatives, Nadine from a digitization perspective. So what we are doing is not dissimilar to what Apple does every year when they come out with a new device. It's not dissimilar to what Samsung is doing in terms of disrupting themselves and making sure that they stay ahead of change, that they're in a sense be the change. That's the strategy.
Okay.
Can I just go on from there a little bit?
Yep.
If you look at the banking landscape in Jamaica, particularly over the last 2 years or so, one of the things you see is that NCB's marketing initiatives, you certainly up the ante compared to your other rivals. They seem to have, quoting Donald Trump, exhibited the degree of low energy in that regard. But let's go into that. What did you see? What are you trying to do with that, with that, marketing? You talked about Nadine, digital, and so forth. But what was the game plan for marketing and taking it to that new direction?
Oh yeah, I forget. So all right, so Nadine is not too well.
But
So,
look, can you and Dennis go into that?
Yeah, man.
The more particular.
not a problem. I know there are people who would be shocked to hear me extolling the virtues of marketing, right? from a few years ago. Well, I say this, Al. A big part of this is about building the brand. Yeah? A big part of the strategy that you're seeing is about building people's image and perception and the reality of what NCB represents, right? It starts, first of all, in the minds of the employees. So a lot of energy. So internally, right, there's a big focus on improving people's skills, competences, and capabilities, communicating internally effectively, which is a part of the marketing thrust and the strategic thrust to make sure that people understand where we're going, why we're going there, why it is important, and what is required for us to be successful in getting there. So there's the internal communication aspect. There's the external communication aspect, but one of the things that has redefined our marketing efforts, and you talk about how in a sense we have separated ourselves, right? It is a focus on impact, right? A focus on making sure that we understand what is important to the consumer in terms of not only the message, but how the message is communicated, how the interaction takes place, right? And how that results in their perception and their view of the quality of the interaction and the relationship that they have with NCB. So a big part of the trust. And I too have sensed it, and I too have had the feedback that people see it as being, a lot more effective in recent times. And this is what people are saying to me. We're interacting with them on social media in a different way, but in a way which makes them feel as if they have a relationship with NCB, right? We have done a number of things. Look at things like Capital Quest, right? And how the market has responded to that, right? People see the value in it. People see it as something that is, in a sense, uniquely Jamaican, something that is helping to enhance Jamaicans, right? And that ties into the whole philosophy. So it is an approach which aligns the marketing effort with the strategic effort, with the organizational image and culture, right? So as to create a holistic perception of who we are, right? And to make that the reality in terms of how we also behave.
Yeah, you just reminded me of something else I needed to ask. So congratulations on the rolling out of your new initiatives and your systems in place and so on, etc. But a pet peeve or project of mine has always been a key service that is quite simple to implement, that is yet to be implemented, that bothers me every time. And this is the third party external transfer. My gosh, can we kindly, as I'm acting as a client,
Come in soon.
Shareholder, can we kindly prioritize implementation?
Come in soon. Yes? There's at a theater near you. Come in soon. We can tell you that this time. Which year? Not this calendar year. Not the calendar year, no. But hopefully, well, by the time we meet to talk about this again. Yeah? All right. Oh, you want one more, Owen?
Just to support what Al said about the marketing, it has been strategic, and the marketplace has felt the stimuli coming from there. But the changes in it, I'd like to hear from the young lady who is doing strategy. Just a brief comment from her on moving forward.
Oh wait, you don't want to talk to her after.
Yeah,
you don't want to talk to her after.
I share her with the others here.
I was hoping to give you exclusive.
All right.
Normally it's questions and you don't ask for comments.
No, we'll give you exclusive. All right. Ladies and gentlemen, thank you very much. Yeah, Dennis,
I think that's it.
Oh yeah, but I know. I forgot about it. No, I thought this was going to close actually. So I thought you were closing. So.
No, but you went there.
Oh, because I said thank you very much for this question and answer session.
I think that's something they need. Yeah, because it's performance review time.
Right.